name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. An indecisive spinning top yesterday, but also a bullish harami. Not what you'd normally see immediately after a dramatic combined key reversal down, bearish engulfing pattern, and bearish open and close black Mariposa as well. Seems the previously mentioned support of the still rising short medium moving average, currently at 70.13, has held up prices, despite the prior bearish pressure, even if it was mainly on a closing basis. So far today, a reassertion, or if you like, a delayed follow-on lower to the recent combined bearish patterns I've previously outlined. Down through the short medium moving average and now also through the lower rising wedge trend line, currently 69.79 of the big old February to date rising wedge. Personally, I think the rising wedge's influence was done when prices reached the appropriate targets topside back earlier this year. However, it's still there and worth noting. I suspect the next significant support will be the January high at 69.10. German DAX futures. We're starting to see intraday indecision now at the top of the market as well. An immediate countering key reversal up yesterday after the previous session's bearish engulfing pattern. It seems a disturbing cap on the market, which we saw all of last week, has continued its work. Interestingly, the depth of the market's move down wasn't that great, and that's for a second day now. Well clear of the supposed support below of the gently rising short medium moving average, currently at 15.433. Instead, the market punched up and closed over the 50% projected Fibonacci line of 15.629, as well as the flatlining short moving average, currently 15.626, eventually coming to a halt at the recent broken lower bull channel line, currently 15.724, despite piercing it in the process. Like I've said all last week and now into this week, it is all getting a bit precious now. So far today, another strong reactionary move, this time down with what looks right now like a possible bearish engulfing pattern. Prices opened higher just over the broken lower bull channel line, then fell all the way down to the short stroke medium moving average, with the October 2020 today uptrend nearby, supporting as well at 15.419, for bouncing up a bit, but nowhere near the 50% projected Fibonacci line of 15.629. Like I said earlier, it is all getting a bit precious now. US E-mini S&P futures. This is all getting really quite precious here right now. Yesterday gave us a new high, high open, high close, but was another indecisive pattern, this time an indecisive doji cross, right at the top of the market. Anyway, I wish to explore once again an idea I put forward 2 days ago. That is the action since mid-May being a possible rising wedge pattern. Why? Well, because I think it is relevant and we may be coming to a breakout. False or real, I'm not sure as yet. So, all this action is in the shadow of last week's immediate countering weekly key reversal up, a subject on which I've already espoused my thoughts. Anyway, we have a recently drawn upper rising wedge trend line, currently at 42.81. This pattern has become evident over the last few days and is close to completion as, depending on your count, we are either onto a fourth or fifth touching of the trend lines. For your information, we need at least 5 touches combined of both trend lines to have a true count. Now, 2 things I need to discuss, both important. Firstly, beware of false breaks. They are common in such patterns, so just be careful. Secondly, I cannot say as yet which trend line will break, the upper one or the lower one, even though the upper one's being tested at the moment, though I can see we're testing this upper rising trend line right now. However, I can give an idea of the size of the move higher or off or under the appropriate trend line when it breaks. For a break higher, it will be a move of about 132 points on top of the rising wedge trend line when broken. For a move lower, it will be a move off of about 67 points off the lower wedge trend line, which is some way below, currently at 41.53. Just keep all this in mind. So far today, another attempt higher with a higher opening just over the upper rising wedge trend line, but still capped by it as prices have headed below it right now. Just in case, we have support below at 42.38 and resistance above from a new 50% projected Fibonacci line at 43.43. French CAC 40 futures. An indecisive doji cross yesterday, right in the main body of the previous session's action. More importantly, this was continued move away, even by just holding where it did. The market, the actual action moved away even just by holding away where it was from the overhead lower time, currently at 66.51 of the recent late February to late March broken bullish shift pitchfork. And this pitchfork will be retired by the next time I speak. Price is also closed for a second consecutive time below the now flatlining short moving average, currently at 65.86. Further below, we have some lesser Fibonacci levels at 65.28 and 64.94, but the next support in size is the old 50% projected Fibonacci line at 64.81. And so far today, a lower open and a fall down to the highlighted next supports in size. That's the old 50% projected Fibonacci line at 64.81, penetrating it before bouncing back up a little over it. It may just be me, but the whole action from mid-April to maybe even earlier than that seems to have elements of a bearish bump and run reversal top. These are just my thoughts. I'll speak more about this next time. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.